Hello, I'm here today with Francesco Conte, Fund Manager for the JPMorgan European Smaller Companies Trust. Welcome, Francesco.
Thank you, Harriet.
So the Trust invests in European smaller companies outside the UK. How big is this market?
So we invest in everything in continental Europe that goes from Greece all the way to Ireland, apart from the UK. We're looking at companies with a market value of between 100 million sterling and 3 billion. So it's quite a big universe. It's over 1,000 companies that we can invest in.
And how do you choose the companies for the portfolio?
Well, we have a very sophisticated in-house model that really flags up changes in prospects for companies at quite an early stage. And so that reduces that universe to a sort of a handful of opportunities that I might be investigating at any one time.
Can you tell me a little bit about European market performance?
Well, Europe has had a pretty torrid time since the financial crisis started in approximately 2008, because the financial crisis for Europe morphed into a Eurozone crisis, where many market participants believed that the euro would break up. Last June, July, President Draghi, president of the ECB, made a very now famous speech where he said that he would do everything within his powers to preserve the euro. Since then, the European markets haven't really looked back, and the second half of 2012 was very strong, and the first 9 months of this year, or 10 months of this year, have been even stronger. And what we've seen are European smaller companies have gone up about 26%. And we've had a very good year, and the trust is up, the NAV is up about 33%.
So you've had a very good year. Where do you forecast the next year going? Do you think economic recovery will be sustained?
Well, the reason why we've had such a good year is not because economy is actually better, but rather because economies are less bad. And the other reason is that by President Draghi saying, I will do whatever it takes, the risk associated with investing in Europe has declined considerably. For next year, I think what we can look forward to, and all the economic data is pointing to an improvement in the economies, even in the worst affected, for example, like Greece or Ireland or Spain, they finally seem to be bottoming out, and hopefully they will start growing again next year. Historically, what we can see is that the first year of recovery is typically the one that is strongest for profit growth. And so next year could be a very good year for very different reasons.
Now, you've got several themes running through the portfolio. Could you just expand a little bit about what they are?
We've done very well, I would say, the last 12 months or so, out of 4 broad themes, I would say. The first one are traditional growth stocks, which is our bread and butter business. So a couple of very good investments in that area have been the world-leading internet online retailer for luxury goods. Another great company we've invested in is a food and pharmaceutical testing company. Incidentally, they're the ones who discovered that there was horse meat in beef. Another theme would have been financials, because as the financial crisis has ended, for example, asset management companies have done very well, and we've had a couple of very strong performers in Italy in that area. Another theme would have been cyclical. So as the economies are becoming less bad, some sectors are actually improving. So for example, the automotive sector is improving, benefiting from growth in China and a pickup in demand in America. And so we have, for example, a couple of automotive components. We have the world leader in bumpers. We have the world leader in high-end brakes that sells their brakes, for example, to Ferrari, Porsche, Mercedes, and so on. And more recently, we've done very well out of companies that are restructuring. So a couple of those things, examples of that would be the wind turbine company in Spain, which horrible sector, which has had a disastrous time, but new management has come in and has been taking a lot of costs out, leading to very strong profit growth. We've also done very well out of the post office in Holland. Now, postal service is not very exciting in terms of growth, but again, they've been cutting costs a lot, and we've done very well out of those shares. So those are the 4 broad themes that have really led to the performance that we see today.
And what about any new trends? Do you see anything new emerging?
Well, I think the surprising thing, speaking to companies, and it really is, we're talking in the last few weeks where these trends are starting to emerge, is that the consumer, who is so beaten up in Europe, is finally starting to emerge out of a very, very prolonged period of austerity that Europe has seen. So we're seeing that pretty much everywhere, even in, as I said earlier, the worst affected countries like Greece. For example, we own a retailer in Greece who in the last 3 months have actually seen flat sales for the first time in years. So I think the consumer will be a big theme, and we're playing that either via retailers like that, or we've invested in several media companies across Europe. We've also started investing in some other products areas. For example, my latest investment is one in camper vans. Campervan, the leading camper van company in Europe, which again has had a torrid time for the last 5 years, but it looks like demand is finally bottoming out. So I think the consumer will be a very big theme for next year.
Francesco, thank you very much for joining us.
Not at all, thank you.
If you'd like any more information, please do visit the Edison website.